Ever have one of those moments in crypto where you just have to ask, what on earth just happened?
Yeah. More often than you think, maybe.
Well, April 20th, 2025 was definitely one of those days. We're talking about a tiny crypto VOXEL market cap around, what, $23 million?
Yeah, a small cap token.
Suddenly trading over $12.7 billion on Bitget. Billion with a B.
It's kind of staggering when you think about it. On that same day, Bitcoin, the king, only did about $4.7 billion in volume on Bitget.
So this little VOXEL completely overshadowed Bitcoin. It's the kind of crypto absurdity we love to dig into.
Absolutely. A digital flea somehow outshining the elephant, at least in trading volume for a short while.
So today, that's our deep dive. What went down, the theories flying around, and what it all means.
Okay, so let's set the scene. It happened pretty fast. We're looking at April 20th between 8.00 and 8.30 UTC. That's like late afternoon Beijing time.
Right, and the focus was the VOXEL USDT perpetual contract on Bitget.
Exactly. It just went completely haywire. Trading volume exploded.
And the price. We heard reports that it's surging over 200%.
Yeah, some insane peaks. Saw numbers like 0.1645, even up to 0.1790 being thrown around. Huge jump from where it usually sits.
So the big question, why? What caused this madness?
Well, Bitget put out an official statement. They called it abnormal trading activity.
Ah, the classic abnormal activity line. Did they suggest a cause?
They mentioned potential market manipulation and said their risk control systems kicked in.
Okay, manipulation. But there's another story making the rounds, isn't there? From analysts like Dylan and others.
There is. And it sounds, frankly, a bit more plausible given the specifics. The theory is a trading bot got stuck.
Stuck how?
Like stuck in a loop. Maybe even Bitget's own market-making bot, just buying and selling VOXEL to itself over and over within a really narrow price band.
So like 0.125 to 0.138, something like that, just ping-ponging back and forth.
Precisely. And even if the individual trades are small, you do that thousands, maybe millions of times in half an hour.
The volume skyrockets. Even if the actual price isn't moving that much overall, or reflecting real demand.
Exactly. It creates this massive artificial volume figure. And, it's maybe less embarrassing for an exchange to say manipulation than our bot broke.
Right, that makes sense.
Yeah.
Avoids admitting a potential system flaw. Now, in the middle of this chaos, some people saw an opportunity.
Oh, definitely. If you spotted this pattern, this bot, predictably buying low and selling slightly higher in this tight range, you could potentially front run it.
Arbitrage, basically. Buy just below the bot's sell price, sell just above its buy price.
You got it. And the stories are wild. People apparently turning like $100 into six figures.
Incredible gains. For a moment, anyway. Because Bitget then did something pretty drastic.
They did. They announced they were rolling back the abnormal transactions.
Meaning, poof, those profits just disappeared.
Pretty much, yeah. Nullified. Which you can imagine did not go down well.
I bet. That raises huge questions about trade finality, doesn't it? You think you made a trade, you expect it to stick.
It really shakes user trust. The exchange basically said, nope, redo. It highlights the centralized power these platforms hold.
And Bitget's full response. They acknowledged it, froze some accounts, announced the rollback.
And promised compensation, importantly, but only for users who suffered losses during that specific 30-minute window.
Ah, so if you lost money because of the weird price action, you might get compensated.
Right.
But if you made money from their potential glitch, tough luck.
That seems to be the message, yeah. And it caused a lot of anger. Plus delays, reports of wider withdrawal problems. It wasn't smooth.
And wasn't there some irony pointed out about Bitget's CEO?
Oh, yeah. Users like Cody dug up comments from Bitget's CEO Gracie Chen criticizing another exchange, Hyperliquid, for doing something similar, a forced settlement during another event. Now Bitget's doing a rollback. A bit awkward.
Definitely looks inconsistent. What are other experts saying? We mentioned Dylan, Ash Crypto.
The consensus among many analysts, like KZG22, leans heavily towards the robot bug theory. The volume is just too insane relative to VOXEL's actual size.
It just doesn't track with manipulation, does it?
Not easily. They're pointing fingers at potential weaknesses in Bitget's systems. The matching engine maybe couldn't handle it. Risk controls failed. Maybe issues with how they pool user funds, mixed custody risk pools, or allowing unrestricted position sizes that let a bot go nuts.
Technical stuff, but it suggests the platform itself might have been vulnerable.
That's the concern. And the community feeling is largely frustration, feeling blamed for an exchange error, maybe even thinking about leaving the platform.
So let's quickly touch on VOXEL itself. It wasn't just some random token, right?
No, it's the native token for Voxy Tactics, an RPG game on Polygon, but still fundamentally a small project in the grand scheme of things.
And the timing was interesting too, wasn't it, with Binance?
Yeah, very interesting. This whole blowup happened while VOXEL was actually on a vote to delist list on Binance.
So people wondered if the pump was maybe an attempt to save it
Hmm.
by showing activity or price strength.
There was speculation, yeah. But if that was the goal, it spectacularly backfired. The key thing is, this wasn't driven by game updates or real news. It looks entirely like a technical glitch gone wild.
So wrapping this up, what are the big takeaways for someone navigating the crypto space?
Well, I think it really underscores the potential, let's say, fragility of some centralized exchange systems. Things can go wrong, sometimes dramatically.
And the impact on trust is huge. When an exchange can just undo trades, it changes the game.
It does. It highlights the need for really robust risk management on the exchange side and, transparency when things inevitably do break.
It's a fascinating, if unsettling, case study. Makes you really ponder the power dynamics at play.
Absolutely. How much control do users really have versus these massive platforms? It's something to keep in mind. This VOXEL thing is a stark reminder of the absurdity and sometimes the hidden dangers in the centralized crypto world.
Food for thought, definitely. What happens when the system itself glitches? A question worth considering on your crypto journey.